So we're talking about the SMH ETF, the chip ETF, possibly on track for its best quarter since 2001. NVIDIA is about 25% of that ETF. Two other AI-focused, you're laughing, two other AI-focused names in there. We're talking AMD and Taiwan Semi. They round out about 40% of this ETF, again, tied to the AI trade. Is that the sole thing pushing this ETF higher, or are there other factors that are tailwinds?
Yeah, I mean, NVIDIA was a huge part of it, just as you mentioned, just given how much it constitutes of the ETF. And I think for the first part of this year and as well as last year, we had a rising tide lifts all boats situation. You could have bought SMH and done super, super well. I mean, it's up 30% this year, versus about triple the S&P. So it was a good trade. I think going forward, though, you're going to, just as you pointed out with the winners and losers just now, you're going to see that not all semis are created equal. And I think what's really going to be the separation is which companies are first and foremost helping with the data center build-outs and which chips are demand with respect to the data center build-outs, where the CapEx is being spent from all these hyperscalers, and which ones will come later. And I think that will continue to bifurcate, where you have the NVIDIAs continue to climb higher, and like the ON semiconductor, which you mentioned, drag a bit.
All right, so you laughed a little bit when I said NVIDIA, because it sounds like you're saying there's just a lot more to talk about. You mentioned bifurcation, basically two different stories when it comes to here. AI is one story. It sounds like data center is the other story. What chips have potential upside tied to that data center story?
I think you continue to play what's working. On the larger side, we like the NVIDIA, Broadcom, TSM. We own all of them. But I think when you think of chips, I think it's not helpful to think of it just limited to chips. It's really, as you mentioned, the data center build out. Which companies are helping build these data centers? So we also like companies like NVT, which helps on the power side. Companies like VRT, which helps on the cooling side. These companies, any of the companies that are going to help provide the services and the supplies and the products to the CapEx spenders, and I think will continue to prosper. So, we like all those trades, but we're staying away from the companies that are more limited to the PC cycle.
All right, talk to me about some of the legacy names in the chip space. I'm talking about an Intel, even a Texas Instruments. I'm looking at it, only up about 2% year to date. Do they have an opportunity to get in one of these stories that you're talking about, either the data center side or the AI trade?
Later. I think for now, they're going to continue to be more cyclical, being reliant on the upgrade of the PC cycle, which, gets further and further pushed out. It's supposed to be a 24 phenomenon. Now it's late 24. Now it's at 25. It just keeps getting pushed out. AMD, despite being at the center of the AI trade, has a big PC exposure. So, that one's getting pushed out too. And now add on China today, as you mentioned.
All right. So I'm sorry, go ahead.
So it's really about, it's split with anybody with exposure to the PC cycle. I think you got to take a pause.
Okay. There's some other names you say you're being quote unquote patient with, like Marvell is one of those names. So when we're talking patience, what's the horizon to stay patient? I think a lot of investors aren't feeling very patient right now when we're seeing the indexes hit new highs. We're seeing a broadening out of the market. So what names are worth the patience?
I think you had to continue to play and work with what's been working to date. There's a reason why NVIDIA is doing so well. It's trading at 30, 35 times earnings, forward earnings, and has a significant degree of optionality to beat on revenue. The problem is the companies like the Marvells, which we owned for a brief amount of time and sold out of because we were just too early on it, is that they don't have the upside potential to beat estimates. And you got to be able to maintain that momentum of those estimates climbing higher. And it's too expensive for that degree of uncertainty as to how high estimates will come, because their products are simply just not in demand. You got to build the stuff out, and then you add on the layers to it, where Marvell and all those other ones kick in.
So one other thing we have to talk to you about, some news today, possible restrictions on U.S.-made chips in China. Is that a big deal, not only for this ETF, but for the sector overall?
Yeah, it's a big deal. I mean, anytime China, cuts you off in some way, shape, or form, it could hurt you. You have any company with exposure to China is already operating with uncertainty. So now, we don't know what the revenue impact's going to be. I still got to look into it. But at the end of the day, what these things do is not so much, hurt the projection horizon and the revenue implications, but more so does it temper the multiple and damp down that multiple? And you don't want to see, you know, high multiple stocks get hurt in that way. So that, which can just add to volatility. So we try to stay away from China exposure.
Yeah, a lot of questions about that. I mean, NVIDIA went out their way to recently say that China is only single digits of their revenue. So I think there's a lot of questions about the overall impact of possible China restrictions. I want to bounce something else off of you. Sticking with tech still, though. New signals from some sector insiders of a possible top to the market, according to new data from Verity, which tracks insider trading disclosures. The ratio of corporate insider selling to insider buying is at the highest level in 3 years. And according to Verity, a big driver of that's come from tech executives selling their own stock, including Palantir's Peter Thiel, who sold $175 million worth of stock last month, his biggest sale since February of 2021. Amazon's Andy Jassy is also on this list. He sold $21 million worth of Amazon stock this year, compared to $23.6 million total in 2022 and 2023 combined. And last but not least, this one's gotten a lot of headlines. Mark Zuckerberg, who's always been a consistent seller, has really ramped up the pace of sales this year, selling $135 million in Meta stock last month, his first sale of that magnitude since November of 2021. A lot of people have been talking about that one. What's your take on these insiders selling?
Well, you don't really like to see it,
right?
You know, because what kind of signal does that imply if the founder isn't as committed as, you know, us shareholders alongside of them? But that being said, you got to look at it on a percentage basis of their overall, you know, net worth within the firm. You know, Bezos, you know, sold $1 billion or two a month or two ago, and that was only like 1 or 2% of his total net worth within the Amazon shares. So I think it's the same for all those ones you mentioned. At least I know for Zuckerberg. So with that in mind, you got to bring context into it, not just look at the absolute number.
Right. There's some context there. I mean, also, I mean, just very quickly, if you're an investor yourself, can you blame some of these founders and some of these CEOs from taking a little profit?
No, I can't. I mean, they need to build bigger homes in better locations. So
yeah, I think we all like bigger homes.